Okay, so this is going to be the recap for the first week of October for my trading strategy. It's honestly Thursday today, October the 2nd, but I don't care that the week's not over. It's time to do a review. I did not have a great day today, and I want to review that immediately before I am not in my recording setup tomorrow morning, and I have work tomorrow morning, so it's just kind of a lot going on tomorrow that I'm not going to be able to get this done over the weekend efficiently, so I'm just going to do it now. It doesn't really matter what happens tomorrow. I know that I will follow my rules, especially after a day like this. I usually pretty good about doing what I need to do. And based off of my average of 2 to 3 trades per week, most likely there's not even going to be a setup tomorrow, so I'm just going to get this review over with today. The outcome of today specifically is the most important that needs to be reviewed, and I'm going to do it as I have the opportunity to now. So the first 2 days, Monday and Tuesday, there were no trades. This is my Canva design where you can see my performance this week and then the expected performance down here. So there's not too much difference. As you can see, the two big trades with pictures I executed as I was supposed to. There is one little note here that does not exist on the expected outcome here. I'm going to go over what I did do correctly and what was supposed to happen, and then I want to go over this intuitive trade setup that I saw, and then I'm going to get into the meat and potatoes of what I want to review this week. So let's go into the expected outcome here. So the expected outcome was taking 2 trades, winning one of them, and no matter what, contract limitations did not matter this week. As you can see, the right side of both the simple and dynamic risk systems are going to be the same as the left side here. So that shows you I was able to risk properly despite the contract limitations this week. So we have 2 setups. One is on gold, one is on oil. So this is the gold setup here. And a few things that I noticed coming into this. So let me hit this replay real quick. So higher time frame confluences don't matter for my strategy, but I do at least like to look at them to give me confidence sometimes, and why not look at them if they do look like they're helping my trade idea. So we're in a higher time frame uptrend. The 4-hour is not really telling us much here. There is this support that turned, or the resistance that turned into a support that it was testing at the moment. If you go to the 1-hour here, we have a 1-hour demand that at the time it was testing, and also a 15-minute demand, right? And then I had a 5-minute demand, although low probability, marked up. So we had 3 demands all inside of each other, essentially. It never retraced to this 5-minute demand, but that didn't really matter to me because not only did it create another, but this one was a low probability demand in the first place. I had the 15-minute demand marked up here, and it created a new 5-minute demand. With this break of structure here, I had a setup to take. It came back into it. 1 candle. It only is all it took to retrace back into the zone. It did a lot of consolidating here. The EMA was flat, so when that happens, I need 2 entry candles to get into a trade. So our first entry would have come not at this candle. It did not close above that EMA, but the second candle was right here. This was your first entry signal, but whenever the EMA is flat like this, I need a second entry candle. So this is where I got in, this entry candle here. The stop loss was essentially 6. I could have made it a little more, a little less, but whenever that happens, I round to 6. So I only aim for a 1R as it is a 1 candle setup, and it only hit 1R before going straight to my stop loss. So very glad at that result there. It obviously wanted to dip back deeper into this demand, and later on I think it ended up bearish for the rest of the day. But moral of the story is I traded this exactly how I was supposed to. I followed my rules and procedures, and I achieved the exact outcome my strategy was supposed to yield. Now this one was today. This is an oil setup that happened earlier this morning. We had a large push down here at 8 o'clock, and it quickly retested it and gave me an entry, all in one candle. Sometimes this is scary, but at the same time, this is exciting to see because a large rejection like this in one candle means a lot of sell orders were happening in a very short amount of time. But sometimes it just does not work out in your favor. Mine immediately went to stop loss. It is what it is. I was not mad at the loss, at first at least. And the last thing I want to talk about here before I get into the main discussion is there was one intuitive setup that I did not take, as it would have broken my rules to take it, but I was looking at it and this one again was screaming at me, so I wanted to take note of it. So I want to go to replay here and kind of go over what I was seeing. So this is gold. We are trading under the 200 EMA, and we're kind of on this uptrend here, but I was not able to take anything since we're kind of creating higher highs and higher lows. I was looking for sells trading under this EMA. I noticed that as far as the higher time frame was moving, we had already begun this 8 o'clock candle, and it was quite obvious that we had retraced and we were pulling back. Now, were we going to make new highs? Not sure yet, but when you're kind of in the middle right here, it's probably going to keep going up, fill in this gap. So this smaller time frame uptrend was in play. And then I noticed that on the 15-minute and the 5-minute, we were making higher highs, higher lows. This is the market structure you want to see on an uptrend. So naturally, when then you get higher highs and higher lows, you have this resistance that becomes support. And this candle here had a nice rejection from that level, and it came back into it. It bounced off of this EMA at the same time that news dropped. This was some bearish news on the dollar. When the dollar becomes bearish, gold becomes bullish. At the same time that that news dropped, we got a nice wick bouncing off of that EMA, a smart money candle that closed high above. We're creating higher highs and higher lows on the smaller time frame, and when you look left, all that there was room and liquidity to sweep. We had gaps here, gap here, gaps up here. All of that needed to be filled at some point, and this was a great opportunity. It wasn't until this bearish candle created this wick and started to close bullish around 9:03, 9:04, when it's like, okay, it's about to close and it's probably closing bullish. That's when I noticed. So I kind of slapped on this trade idea instrument here, and this is kind of what the trade would have been. Now, I probably in reality would have taken 2R. I would like to believe that in the future I want to start integrating a different exit strategy when TP gets hit this quickly. I would have been getting in about 9:04, 9:03 or so. This would have hit my take profit in like 4 minutes. And whenever that happens, I have kind of tested a couple, but I'm going to keep testing different exit strategies. Trading to the bottom of every 1 minute candle. So in this case, you hit your profit target here, and instead of taking the profit, you wait for the candle to close and you put your target under the low of that candle, and then the low of the next candle, and then the low of the next candle. It's kind of in the way here, but then the low of this candle, then the low of this candle, and then finally after this 913 candle closes, the low gets broken, and you get an extra 1.6 R from that exit strategy. So again, a great trade that I did not take, and this one was again screaming at me. So in the future, we'll have to see how can I incorporate this into my trading plan. Now, the main topic of discussion for today is how I reacted to the trade today on oil. So what actually happened on oil, and I'll put it on the screen. I took this trade and I had my stop loss exactly where I was supposed to have it. This was, I believe, 61.41 was where my stop loss was supposed to be. I got filled at 61.47. I had a 6-tick slippage because of this, the strength of this candle that hit my stop loss, and I lost an extra $200 or 0.35 R if you will. That pissed me off. I didn't actually notice at first. I accepted the loss. It was fine. I wasn't even on tilt or anything. It wasn't until I checked my P&L for the day and I saw I was negative $800 when I was expecting to be negative $600 where things started to go downhill. Now, at first, obviously, the emotion comes, but it didn't overtake me immediately. It definitely had sat there for a bit. I suppose I marinated in the anger for just a few minutes, I'd say. Then I started to get on tilt. The more that I thought about how I didn't deserve to lose that money when I did everything I was supposed to. I lost more than I was supposed to, and that's not my fault. These were the thoughts running through my head. I then decided I wanted to make it back, and I kind of just gambled on gold. So that's what I wrote down here. I just kind of took a random position, supposedly used my intuition or whatever, but like this was not screaming at me like the one I mentioned a few minutes ago and the one on last week's video. This was just straight gambling. And then I hit my daily loss limit. I was actually confident I was about to make the money back. I bought on gold and then it spiked to the downside. I sold and was about to sell. And it's neither here nor there what the result was going to be. I was still breaking my rules, but regardless, right before I was going to enter my sell position, I got hit with my daily loss limit and I was unable to trade for the rest of the day. So I was forced to take a step away from the computer and go process my thoughts and emotions. The daily loss limit is there to protect you, and that is what it did in the end. I would like to say I would have made all of that money back in the sell that I just said I was about to get in, but who knows? Tilt is a dangerous thing, and it is a snowball that could have kept rolling and building had I not dealt with it. But it's been a while since I've experienced this. I thought I had overcome it, because normally I don't feel this feeling and this tilt and this situation where I gamble to revenge trade does not happen unless I miss out on some profits. FOMO specifically is something I am known to react like this from. But there was no FOMO here. I took the trade I was supposed to take and I accepted the loss I was supposed to accept. Today, it was, I guess you could say, an unexpected loss. I feel like I'm good at acknowledging and accepting the risk that I'm about to take when it comes to making a decision in a trade, but it's usually whenever something unexpected happens. So because I'm not prepared for it mentally, emotionally I'm not prepared for it either. So I have unexpected reactions from that, and it's unpredictable. I thought FOMO would be the only cause for me reacting like this. There are situations that I cannot plan and I cannot prepare for, and I need to keep my emotions in check when these unexpected situations happen. I can't prepare for everything. Sometimes things out of my control will happen, and this was out of my control. That's the huge reason why I got so mad, is because this was out of my control. FOMO is in my control. I can be aware. I can do other things to make sure I don't miss a trade, but doing everything I'm supposed to do and losing unexpected money is something that I'm not prepared mentally for. So moving forward, how am I going to solve this? How am I going to fix this? I'm not positive, but I do have some ideas that I'm definitely going to implement. So this is the kind of conclusions that I've come up with. I need more preventative measures to deal with tilt. I have this mood meter. This is something I found shortly after having this reaction. This is kind of a way to really identify how I'm feeling. I think that I'm going to make a rule that I need to point towards the specific emotion I'm feeling before every decision. Now, that's easier said than done, especially when I've already got habits seeing a trade, evaluating the trade, and then taking the trade. I'm going to have to implement a new step into that process. I am now aware that things out of my control and unexpected outcomes can occur, and I am ready to deal with those accordingly. Now, mandatory trading is another idea that I have to implement into my process. This is less preventative as it is a way to reflect and learn. So every time that you feel an emotion, there is usually a biological response that happens first before you really feel the emotion to the fullest extent. Usually, maybe it's a big exhale, like it's gonna be maybe you punch the wall. You can see I've written some down here, and that is what should tell you you are feeling an emotion. If I can notice that I'm doing something like that in the moment, then I can point towards, oh, I'm feeling an emotion. Let's evaluate that. Let's walk away and think about that for a second. Because when you can identify an emotion, it usually lessens the extent of it. Again, this is something easier said than done. I would like to implement this to the fullest extent as I can, but it'll be hard remembering to do this. One of the hardest things about this journey is mistakes like this don't happen that often necessarily. I mean, if when you're in the beginning of your trading career, I'm sure this might happen more often, but for me, especially with the journaling and stuff, like it's just something that doesn't happen often enough to where I can learn from it quickly. It's hard to like notice patterns when those patterns happen over such a long period of time. I will say the FOMO thing, I feel like I've got under my belt to the for the most part, which is great. FOMO is something I can recognize when it is happening. This is just kind of under the unexpected category. There's probably some other stupid shit that might happen one day that I have no control over that I will not be mentally prepared for. What if I'm living with a cat and the cat comes and presses on my keyboard, takes a trade, and what do you know? There's an unnecessary loss on my account now. Something like that I cannot expect, I cannot prepare for. So I need to be able to regulate my emotions, react from them, acknowledge them in the case that something like this happens so I don't make any rash decision. And this is what I have right now in order to prevent that. I am dedicated to making this work, so I trust myself that I will hold myself accountable and hold these rules to a higher standard and whatnot. At the end of the day, I only lost $400 more, which is less than 1R of what I was supposed to lose. So in reality, it wasn't a super destructive day. Yes, I lost the extra 0.35R on that position due to slippage, but obviously there was nothing I could have done. So that's why in the expected tab here, I have myself losing 1.35R because obviously there was no changing that. Like in an ideal world, sure, I would have lost 1R, but we never live in an ideal world. The contract limitations, the account size, the prop firm, none of these would have changed the outcome. It is simply the volume and the slippage of the broker, which every broker has these problems. I think it's important to follow my rules, take the trades that I'm supposed to take for this reason, because sometimes things like this happen that if I wasn't following my rules and taking the trades like I was supposed to, I wouldn't have been able to predict this slippage occurring at this specific time. So overall, this could have been a lot worse. I'm glad that it wasn't worse. I'm grateful for the daily loss limit, and I'm grateful for me being able to bounce back as quickly as I did. I mean, I just stopped trading like 2.5 hours ago, and here I am already. I have no emotions right now. I have completely eradicated my anger, and I'm moving on, and I'm trying to learn from this. So I'm proud of myself for that, at the very least. I will trade tomorrow, and whatever happens, happens. I'll include Friday on next week's recap as far as if anything actually happens. I've got some things to think about as far as how my process will include these preventative measures.